What is going on, everybody? It is January 16th, 2024, daily log episode over NQ and the trade from today on the live stream. So if you weren't there, I'll cover the trade that was outlined. These daily logs, I just want to note, if you're watching them, congratulations, because to me, these are very, very important. They're very key. If you just watch live streams and you don't go back and review price, and you're only at the live streams for signals and really not for the information, then you're never going to learn how to do this yourself. You're never going to learn how to properly trade. And I think these daily logs, the reason I make them and I think they're so important is because I'm replicating what ICT did for us during the charter membership. And even in 2023, he didn't do it as consistent, but if I'm able to do a live stream and then do a recap every single day, you're learning, right? You're able to see what was unfolding in real time and then having a recap to understand in hindsight exactly where you could have went right or wrong, what to learn from that day, what you did right or wrong. So it's very, very important that you watch these. So if you're new here, welcome. But to me, these are very, very key. Looking at the daily time frame and the closure of today, I talked about how we are coming off of a holiday, which is typically not the highest probability, just that factor alone. And I also mentioned in the beginning of the stream how we had two indecisive closures on the daily time frame on Friday of last week and Thursday, and then even today now. And we just continuously keep wicking into this inversion for value gap on the daily. And there's a few things that I'm kind of eyeing, and even today during the session, I'm trying to gain a feel what dollar index wants to do, bonds want to do long term, because dollar index, if it continues to go higher and continues to gravitate higher, it would indicate towards me that indices would drop lower. But I don't see enough information for that on indices to clearly say that. I still believe fully that we're going to expand higher and we're going to take out the relative equal highs in here. That's what I believe going into tomorrow and the rest of the week. And if you want the real reason why, it's already been explained before, but on the monthly time frame, we're overall still in a bullish environment. Right? If you looked at, I will go to it after I line this up. If you go to just the overall structure price and what happened basically the last 60 days, even the last 6 months is a good reference point. We've dipped down into this fair value gap here. We moved away from it, shifted above an old high this month, power of three. It's fantastic if you are looking for power of three where it's open, high, low, and close. If you understand that concept, then in a bullish environment, you want to see the open, especially on a monthly time frame, to drop lower to set the low of the month, and then expand higher to set the high of the month. So we're moving in layer portions. We're basically halfway in the month. So this is a good reference point. We've already set the low of the month inside of the inversion fair value gap here, closed above it, lending support to attack the buy side liquidity, which is resting here. This is where everything, when you go into lower time frames, is lending support for your analysis. The weekly time frame, we closed higher last week, rejecting off of the fair value gap in here. And then we have this old SIBI there as well. So we're resting inside of it currently. But I do believe if we can close out the week, envisioning it wise, if we can drive higher above the buy side liquidity, close above the SIBI, that'll act as inversion and take out all-time highs. So you can see everything. This is the monthly, this is the weekly here, daily inversion. So if we refine all of this, we dropped down into a discount last week, right where the monthly inversion is. Drop down into a discount relative from this dealing range low to that high there, displaced higher, got above the inversion. And now we're utilizing this. Look at where the bodies are closing. It's very key and important to look at the bodies and the closures of them. I know it's a very famous quote. The bodies tell the story, but it's very true, because look at where they're closing. They're closing outside of the premium end If you think of this basically like a concrete wall, it's not willing to close beneath it. So that's telling me that we're still bullish. It's telling me it's lending some type of support that I still want to look for higher prices. And going into tomorrow, I'd be looking at the 50% of this previous day's wick, because wicks will act as gaps. So I'd be looking at that area to lend support to move higher, right? And then we'd be looking for the buy side liquidity, which is resting here. And of course, above these old highs, which we've now built up beautifully clean, relative equal highs in here. You can see they're very, very smooth. Any smooth edges will be made jagged. And to me, that just screams a fake top. Any retail, and I hate saying that because we are all retail, but in the eyes of analysis or technicals, what they believe resistance and support, that is lending resistance, right? They think it's a ceiling. They're calling it top. They're looking to short this, but in our eyes, this is liquidity. This is where money is resting. So the algorithm will seek the buy side liquidity. And I drew out the 4 hour. We closed above it here. This is an inversion. Look at the bodies and the respect in here. Even though we closed beneath the equilibrium, which is that dotted line, we still drove up higher. Looking at the 1 hour time frame, you get a much better, clear view of the buy side liquidity. So to me, that's too smooth. It's too clean. If I had to put a lot of money on it, that's going to be ran sometime this week. So we actually dropped down today a little bit beneath this fair value gap. But if you were being studious, what's this last down close candle? Your bullish order block. So look at the mean threshold of it, reject off of it, displace higher. And that's the main reason why I was looking for higher prices today. Due to the higher time frame analysis and where the narrative is what the higher time frame is seeking. So to me, I'm going to stay on board with that. I'm not trying to counter that. And there's probably a lot of people today that were trying to short this in the opening session, and they're getting burnt. And that's the reason why I'm sitting here, calling. I'm not electing to go short. I'm only looking for longs. So if we dig down into it today, the morning session, or at least the opening, was very sloppy. And I was predicting this going into the session due to us coming off of a holiday and where we were at on the daily time frame, the weekly, even the correlated assets. To me, it seemed like we were going to have a sloppy open. You can predict these things in time, especially with the calendar. I didn't mark this out in real time, but I was paying attention to it. I just really didn't get to it. But this inversion, fair value gap was sticking out like a sore thumb. And this fair value gap is really what I was annotating in real time. And I was bringing your attention towards the bodily closures and how we were wicking through it and not closing beneath it. So it was a real tell to me that we're probably going to see higher prices today. If you also want to add in confluence where this inversion is, this last down close candle is your bullish order block. So a couple of confluences in here. Looking at a 5-minute time frame, I can take a couple of these things away. If you refine it, the inversion here, take this away, and then refining the 15-minute BISI is the 5-minute here. And I was bringing your attention towards the bodily closures. And I reviewed ICT's trade today, how he shorted in here off of a turtle soup. So if you want the explanation towards that, I think it was pretty clear. But 3 drive pattern of a buy side liquidity. Opening happens, we drop off lower, taking out the relative equal lows prior to the open, right? So these in here. I brought your attention to how I wasn't looking to short. There was no particular reason for me to short due to the narrative and the underlying basically narrative. To me, there's no reason to short. So there may be an entry pattern or a model that you see, and majority of the times that your model, your entry pattern fails is because either you're not paying attention to narrative, and even me, that of course we're human, but narrative is a huge point. Time of the week, the calendar. There's a lot of different factors to why your model isn't working, and it's usually the user and the perception you have on it. So I waited today. I was electing to kind of sit on the sidelines until we got above this old high because I was afraid, not afraid, it's the wrong word, but I was cautious of the idea of a possible seek and destroy day. You could see we were taking out buy side liquidity, sell side, very choppy range bound. So I didn't want to prematurely get into a long here. And I was hoping for some type of entry in this area or even this candle to get a little bit more squeeze out of it. But if you saw in the live stream today, in here, I just want to notate this is an inversion fair value gap. So we closed above it, annotated it live on stream, drop down into it. If you go into a 1 minute, it's where you can really get into the 1 minute time frame. So coming off the idea of I'm just going to have this 5 minute BISI in here. So let me try to take away. Now you get the point. But we're looking at the bodies, respecting the CE of it. We're displacing away. We shift above an old high. And I explained the reasoning why I wasn't particularly keen on trying to long in here, as I just explained with the possibility of a seek and destroy environment. It's very easy in hindsight to say where you could have entered. But we displaced higher, moved up into a premium SIBI here. Retrace lower into this old SIBI, which now becomes an inversion level. We drop down into it, displace higher, move up into that SIBI once again. And driftly on the stream, if you go back in time, I may have been hovering my buy or sell button. It was right at this point. I wanted a little bit deeper retracement into this inversion here. We didn't get to it. If you look very closely, maybe just the tail end, the premium end. I wanted to see if we could, yeah, we didn't reach into it. If we could at least dig into 25 or 50% of it. Because at this point in time, I'm fairly certain now that we're going to keep expanding higher, at least moving to the current new week opening gap and the old new week opening gap up here. So if price dug down into that, I was willing to go long in here, but unfortunately I didn't get it. That's part of discipline. It's part of rules. I'm not just going to randomly enter into the market. Displace above the current new week opening gap, move higher into, this is an old new week opening gap. Then we drop off lower in here into a fair value gap where I ended up going long. So go to the live stream, you'll see the entry in here. And this is also based off of the 5 minute time frame as well. So it wasn't just the 1 minute, it was primarily the 5 minute time frame and the fair value gap that was resting in here. So this here was the entry. It was probably up in this wick here a little bit. And my stop loss went beneath this candle's low. And I was explaining how to anticipate an IOFED and how to anticipate a breakaway gap. And there's a lot of factors to that, which just for one of them, a rapid displacement or a change in kind of state of delivery where you're really spooling towards a draw on liquidity, you can anticipate breakaway gaps in an IOFED. So I entered in here and you saw me take off a couple partials, and then I eventually got stopped out in profit on this candle when we dropped off lower in here. And then the rest of the day, we just completely moved off lower, attacking sell side and kind of moving back into the opening range. Again, this is the type of price action that you're going to get where it's not clearly one-sided and you're just getting back and forth. There's still a lot of great opportunities in here, but I can see where a newer student could really, really mess today up. You could really get burnt on something like today. And I have as well plenty of times. So you have to understand, look at where we're at on even a 1 hour time frame. We're stuck inside of a dealing range. So you have to be very nimble in these environments until you break out of them, until it's a clearly one-sided draw on liquidity moving, quickly towards that. Then you have to be very nimble because we have this low here and that high, and we're just bouncing around inside of it, creating liquidity basically. And inside of, this is a little tip or a gem, if you stayed this long, if you're ever inside of a consolidation, constantly refer to what price is taking out inside of the consolidation and what is it leaving. So look at what we're constantly doing. And here we took out sell side liquidity pool in here. Took it out once, twice, and we dropped lower again in here, taking out a lot of internal sell side liquidity, continuously referred back to the dealing range open, and then we moved higher. So to me, we're leaving all of this buy side liquidity intact while taking the internal sell side of the consolidation. So to me, it's pointing to the idea that we're going to move higher. I don't know when. It could be tomorrow, could be the next day, but those highs will not be left intact. Okay, that is going to be the end of the video. If you're wondering, I always do these as a one take. I never edit because I don't know how to do it. But appreciate you tuning in. I will be live tomorrow. Until then, good luck and good trading, everybody. Be safe.